Dave, I'm having flashbacks to when I was a young man in the 1970s. Stagflation, it was miserable. Inflation went to 12%. I had a 12% mortgage. Oh, and the thing that's got me going on this is the latest inflation numbers for April here. Prices are up 4% over the last year, which is a lot, but the real scary number was they rose 0.8% in 1 month. And if you multiply that by 10, if that happened for the next 12 months, we'd have 10% inflation. So, good Lord, should I start growing my hair long again? And, the sideburns, are the 70s coming back? What do you think?
No, I don't think the 70s are coming back. And yeah, my first mortgage was 12.5%. So I'll get you beat on that. And we thought that was a great rate at the time because they'd been higher, But no, we have. I mean, the April consumer price index did show an increase of more than 4% in the past year, which is the highest we've seen in quite a while. So it's sparking all kinds of worries about that inflation is coming back, that we're going to have a big, the kind of the wage price spiral like we saw in the 70s. But I don't think it's the same. I think this is mostly a temporary phenomenon. It's just caused by a very strong economy coming out of the pandemic, where we've got a lot of supply chain constraints in various industries, from autos to housing, to supermarkets that are causing prices to go up fast. But I think this will last for a year, maybe a little more, but it won't be. I don't think it's going to be an ongoing spurt of inflation.
Yes, we're seeing the polar opposite of what happened a year ago when we went into lockdown.
Yeah,
prices actually fell for 3 months.
Mm-hmm.
We had a slight deflation during that period, and as people were thrown out of work, as companies had things they couldn't sell anymore, as people started buying more goods and fewer services. Now they're coming back to services, and they're coming back faster than supply is coming back faster than demand can meet it. In fact, we predicted that this would happen in one of our episodes about 3 months ago.
Yeah, we did. And you have to keep in mind that when we say, prices were up more than 4% in April, you're comparing with kind of the depths of the pandemic, last spring, when, as you said, prices were falling, the economy was shutting down. Merchants were just trying to move goods any way they could. Energy prices were falling, and everything else. So I think this is mostly a recovery effect, compounded by some kind of kinks in the supply chain, and everything from freighters backed up on the West Coast to the Suez Canal problem, to it's numerous things have conspired to make it difficult to get things to market.
In fact, a quarter of the 1 month rise in prices was attributable to autos, cars and trucks. They rose 10%. And the reason is obvious. The new car makers can't make enough of them anymore because they can't get the chips because there's a supply chain.
There's a semiconductor shortage, and there's high demand. I mean, people have money in their pockets due to the stimulus, and for feeling confident that their jobs are going to come back after the pandemic. So so there's you've got classic strong demand and restricted supply.
So the rosy scenario is that the supply chain will work itself out over the next few months, and we'll go back to the low inflation period that we had before COVID. However, the counter argument to that looks at Joe Biden and his spending. Trillions on stimulus. He wants to spend more on more on infrastructure, just pumping money into the economy. And as Milton Friedman said, inflation is always and everywhere a monetary phenomenon. You got too much money out pouring it out there, and prices are going to go up. What do you think of that?
Well, I think you have to look at the stimulus again as a one-time thing. Yeah, it is increasing demand right now, but I don't think we're going to get another 2 or 3 trillion in stimulus, relief spending. I think we're going to hit the limit on that pretty soon. And the infrastructure bill, I mean, at least as proposed, Biden would pay for it with tax increases. So that, in the long run, shouldn't be inflationary. It might be in the short run because if try to ramp up a lot of construction projects and the materials are in short supply. But when you mentioned Friedman's monetary comment, yes, this is really up to the Federal Reserve. I mean,
Right.
if the Federal Reserve tolerates higher inflation, we'll probably get higher inflation. And they have said they're willing to tolerate a little bit more than their 2% target for a while. They haven't been real specific about that, but they aren't going to react to if we get 2.5%, maybe 3% inflation for the rest of 2021, because they missed their target on the low side for a decade. Really, we had less than 2% inflation.
Well, the problem is that the Fed's record has always been a little bit slow on the upside and a little bit slow on the downside in terms of interest rates. They tend to get behind the curve a little bit. And that's what's a little bit worrisome here, because if they say we'll tolerate a little bit more and then 2%, and people start expecting a little bit more than 2%, inflation expectations move up. Companies say, well, we can raise prices a little bit easily. Then you get back to an inflationary scenario in which the Fed has to lower the hammer.
Well, we have a good canary in the coal mine here. It's called the bond market.
Yes.
The bond market is not worried about inflation. If you look at you can come up with a measure of inflation expectations based on the TIPS market and regular bonds, taking the difference, and it's seeing maybe just a little more than 2% long term. It's not particularly worried, and the 10-year Treasury is still under 2%. So that if bond traders were worried about inflation, you'd see that going up fast.
You would see that the middle and the high end of the interest rates going up significantly, and we're not seeing that.
Yeah.
So how long will it take all these kinks and the shortages and the hiring problems to work themselves out?
I think we'll definitely continue to see higher than average inflation readings the rest of this year, probably into 2022. But then, by the end of next year, I would think it'll be working itself out, and we'll be getting back down, into that, low 2% range.
And I won't be growing my hair down to my shoulders again and having long sideburns.
I wouldn't advise it.
Okay, go back to the 70s, man. Plus, I had more hair back then.